Red FM, FIFO Life. Big Al here with you now, joined by Alex from Chesswork Group for our tip of the week. How are you, mate?
I'm very well, Alan. How are you?
I'm doing pretty good. Today, going to be talking about bank loans. Now, that's kind of a scary subject for some people, especially if you don't really have the knowledge going into it. First thing we can talk about, I guess, is looking at other banks and not just choosing one bank because you like the name of it.
Yeah, or because you've been banking with them since you're a kid, and this is the classic example. People have got the Dolomite account when
I was about to say that, yeah.
Yeah, I mean, and then they end up staying with that bank for the rest of their life. The funny thing is, statistically, people are more likely to stay with their bank than they are their husband or their wife.
Really?
Yeah. So,
wow.
And this is the thing. My philosophy is that you should be as loyal to a bank as you are to a TV station. So if there's crap on TV, you change the channel.
Yep.
And it's the
not to radio. At radio, you have to be loyal to Red FM.
Yeah, of course. Yeah, radio is totally different. But yeah, so I mean, the thing is that this is a classic pitfall I see people make. And they'll go to their bank and they'll say, "Look, I want to get a loan for this," and the bank knocks them back, and they go, "Oh, okay, well." That's it. I tried. I wanted to get a property, but the bank said no. Why
would the bank knock people back?
Great question. The answer is that the banks are constantly changing their policies. So the thing is that banks are taking on debts from all different spaces, whether it's home loan, investment, all different types of commercial, and at different points in time they're actually either over leveraged or they're under leveraged. So if they are over leveraged, they'll actually start declining bank applications. Because they don't want to have any more of those type of loans on their book.
Yep.
And conversely, sometimes they actually chase it. So, like, for example, there's banks out there now that are paying you like $1,500 to just refinance. They're saying, hey, look, not only are we going to beat the rate that you've got with your bank, but we're going to pay you $1,500 to move.
Geez, I might get on that.
Yeah, well, I mean, this is the thing, and these policies are changing, almost daily, So, and not to put too fine a point on it, the interest rates are changing as well, and some banks are passing them on, some banks aren't, and the thing is that when you're looking to buy, don't stop at the first bank. And this is where a good mortgage broker comes in.
Yep.
And I can't stress that enough, is you've got to find a good
one.
I
was about to say good being the key word there, absolutely. I mean, you guys do your research ridiculously, I imagine.
Yeah, definitely. And the truth is that most brokers don't. And, most brokers are really just order takers, and they'll just kind of, go, oh, okay, what do you want? And they don't really give you any advice. They don't really help you kind of work out what it is that you want to do, what you're trying to achieve. And ultimately, they'll just hunt down the cheapest rate. And the thing is that, the rate might not be the be-all and end-all. It might be a case of there's other loan features that are more important to you that are going to actually help you pay down your debts quicker.
Yeah.
So this is the big problem that I see with so many investors. Now the other thing to remember as well is that each bank is going to use their own valuer to value the property.
Okay.
Now, valuations, I can tell you, they are not an exact science, and I've seen this personally where I've had one client, they've gone to buy a property and the value has come in $30,000 less than the buying price. And you're going, oh, okay, so, and the bank's kind of knocked the loan back on the strength of that valuation. Literally 1 week later, gone to another bank and they valued it exactly on the dot. So what does that tell you? It tells you that valuations are not an exact science. Like the valuer who valued it $30,000 less that week, I don't know, woke up on the wrong side of the bed or, had a fight with his missus in the morning and decided, you know what, no, I don't reckon it's worth this. And just at the stroke of a pen, that bank, that's it, knocked back, you can't get the loan.
Wow.
Next bank said, yep, here it is, on the money, here's the loan, thanks for coming.
Yeah, wow. Well, there's some great advice there. If people want more advice, they can actually download your free ebook.
Yeah. Look, I encourage everyone, get onto the website. It's www.chessworkgroup.com.au. Enter your details and you get a free ebook.
Yeah, nothing wrong with free.
Nothing wrong with free at all.
Awesome. Well, thanks for your time today.
Thank you so much.
Alex there from Chesswork Group. Go to the website to get that free ebook, chessworkgroup.com.au. That brings an end to FIFO Life for this week. Take care. See you later.